How to draw trend lines and support and resistance lines perfectly. How to draw support and resistance lines and trend lines. Trust me, this is the main tool I use. All the ones I've taught you earlier, I only use those strategies for confirmations after drawing my trend lines. Trend lines and support and resistance lines tells you what the market is doing. It tells you what will happen on the market. All those indicators are just telling you basically on what is just happening. But trend line will tell you the history and the future. To tell you the history and the future of a market. Now let's go. Trend lines. Some people find it very difficult to draw trend lines and even resistance lines. So let's start with resistance and support lines. Those ones are easier. Okay, so to draw, the first thing you need to do to draw a resistance and support line, make sure you zoom in. Is it zoom in or zoom out? Don't know which one is it, but when I do it, you'll understand what I'm talking. This is what I'm saying. So either zoom in or zoom out, I don't know. So for example, this is a trend, this is a resistance support line. Let me change the index, the pixel rather. Where's the line? Okay, let me add another one. Okay, so now you can see these supports. See, there is a support level here. There's a support level here. There's a support level here. We have another one here. Okay, we have another one there. So when you are drawing a support or resistance level, make sure that line is touching at least 3. Let's say at least 3 of the lines of the levels. So see this one I just drew. It touched this one. Let me use a color blue, so it's because that place is already red. So you can see it touched this blue, this this support. It touched this support. It crossed this support, so it's still a support zone. It touched this one, it touched this one, and this one. Okay, it's not touching this one, but at least almost close. So the mistake some people do is they bring it down to the least, and it is only touching one. You can see it is touching only one. At this kind of time, markets just tried to break out, then it came back inside. So the major support levels is here. So let's see if this support level has once been a resistance. Let's check the history if it has. Okay, you can see that's the fact. Support levels later turns to resistance, while resistance also turns to support. See the support we drew at that level. See that it has it was a resistance on this chart on September 3rd. It was a resistance. See, it was a support here, another support. See, this one is even good for this is the kind of swinging trend I taught you on the trend and the trend type. This is a swinging up trend. This is a good trend. So just to wait for it to come back, then buy. wait for it to come back, buy. Remember the rule, don't sell, because you can't tell this is where it will sell or buy. We sell. If it's on an uptrend, don't sell. If it's on a downtrend, don't buy. Just wait for it to pull back, then enter a sell or buy according to the trend. So if it's an uptrend, just be buying. If it's a downtrend, be selling. That's a quick recap. So back to resistance and support lines. So see here, that same level we drew, see it over here, see it as a resistance here, see it as a support here. That's it. Let's check again. Okay, we have it here again. See it as resistance here also. Resistance, resistance, resistance. So that's it. It tells you the history and future. So in the future, this support level will still be respected. Maybe as this market is buying right now, it has been moved. Okay, as this market is going up right now, whenever it is coming down again, it will still respect this support. So on this kind of market, you can place a pending buy over there. You can place a pending buy and maybe TP here just for scalping, because even if it's a strong downtrend, it will still respect it and pull back a little bit, then continue the trend. So support and resistance levels. Let me draw it on this resistance. So make the rule for drawing it, make sure when you are drawing it, it is touching at least 3 lines, 3 supports or resistance. Yeah, see this one now. This one is touching this one. This one also is not left out. It is crossing this one. This one also is not left out. It is touching this one and these 2 mini support resistance over here. So let's check the history again. See, you see here, you can see this place also. See, you can see the history. So if you have drawn it from this level now, let's say you have drawn let's say when market was selling over here, maybe you have drawn this resistance level, for example. Maybe you have drawn that resistance level and just wait, or maybe you set a pending sell. Let's see the next time it is touching it. See, it came up a little bit. If you are with the market and you see that it came up to it and did it, and your what's it called, your pending order was not triggered, if you should have entered a sell here. That means it's not ready to touch that support, that resistance. So after a long time it has left from here, and was selling, you see, the next time it got to that level, at least it respected it. You must respect his great grandfathers now, his great ancestors. It respected it. It came here again, respected it. You see, at least respected it. It tested it 4 times, then went back again. So that was a very strong resistance. Then went back again. Yeah. So those are the tricks. Those are the tricks we use on this market. You just have to be patient. See it again. That same resistance. So see it again. See it again. That same resistance. So resistance and support levels are very essential while trading. You don't just base on indicators. I wonder why some people will be looking for robots to trade for them. It's For me, I found it as an act of laziness, act of pure laziness. You are looking for a robot to trade for you, robots you don't know what was conjoined together to, and looking for custom indicators. I don't depend on custom, though they work. I know they work, but I don't really depend on them. I do technical analysis and use indicators just for confirmations, because if you're a forex trader, if you're a trader, you must at least have 3 confirmations before entering a trade, because I can't just buy now and someone is telling me, sir, why did you buy? And I'm looking, or maybe I just tell him because the market is buying. No, you should have at least 3 confirmations. So that's why we have indicators. So back to our course. So that's that about resistance and support levels. Now, another great tool is the trend line. Trend line also works as resistance and support lines, but this time around they are not on a plane level like this. They are not on a plane level. They are not horizontal. They are vertical lines. So the same thing you need to this is where trend line works well on swinging markets, on swinging trend. See this swinging trend over here. Trend lines works very perfectly here. So I told you, when it is buying, when the market is buying, don't sell. You can actually sell. Yes, you can actually sell with the help of trend line. But if you are not using trend line, don't sell. Just wait for you to pull back and enter a buy again. So but for trend line, you can sell and buy, sell and buy. As it is swinging, be selling. As it is buying, be buying. So let's draw a trend line here. So the same principle we used for resistance and support lines. The tool for trend line will be different. Click on shapes and click on this slanted line. This one is used for support and resistance levels. So but this one will be used for trend lines. So click on it. Find the lower low if you are drawing a support trend line. Support. So this is the lower low. Start from, where is it? Okay, this is the lower low over here. So place it on the lower low, draw it up. So let's assume the market was still here. So you understand? So let's say the market was still here when you were drawing this trend line. So let it touch the tip, then join it with the second support, the upper support. This is the lower low, this is the higher low over here. Excuse me. This is the lower low, this is the higher low. Then draw a trend line for support also. Sometimes in this kind of market now, you can see it is still giving us only one higher high that is good. We can't use this one, because when you draw a trend line for this one, it goes up like this, and before market reaches that level, it will sell. So in this kind of those are the tricks for trend lines. Master this trick. In this kind of market, just look for a nearby support. If it is resistance you are drawing, look for a nearby support. If it is support you are drawing, maybe this kind of support over here, like this kind of support over here. Maybe you want to draw a trend line for it. Oh goodness, sorry for that. maybe you want to draw a trend line for this. Look for, this is a support, right? Look for a nearby resistance. So let me show you what I'm trying to say. This is a nearby resistance over here, so draw it from that level down. These people have come again. No, can draw it down. You see when it came, so from this resistance down to this support, you see when this market touched this line again, it respected it and bought. So now that it has formed another lower low, so you can now shift, it. Excuse me. So I'm drawing only these two lines together, these two supports together. So you can see it's respected it here again, it's disrespected it here. It's not all time it respects it also. So that's it. So about this one we are drawing before, so because we have only one higher high here, so we'll be using this support to back it up, to back our drawing up. Here you see, so we are using that support. So now let's scroll. Okay, now let's increase this one and also this one. This, you can see this support works well with this one. The market still respected it here, and here, but this one formed another support here. So if you have entered a trade when it was here, you will still be, though it might do a little pullback it might do a little pullback and buy again. Do you see? So after it has formed, so immediately it is forming new levels, make sure you are adjusting your trend line. So immediately it's formed this new one over here. You know, we used only these two before, so immediately it's formed this new one over here. Adjust the trend line on it, so you can see the next time it is touching it, you can see it respected it well. So that is the trick on how to draw trend lines until it breaks it finally. So I told you that swinging trend always break out to a strong trend, either up or down, but most of the time it continues the trend. But in this case it breaks against the trend. Sometimes it may break out to be uptrend and to be a very strong trend, so it won't be swinging like this anymore. But see this one now, it's break out to a strong downtrend. So that's that about support and resistance levels and trend lines. So let's check higher time frames. This same thing I'm doing on lower time frame is the same thing, you can do it also on higher time frame. So it's still the same principle. Okay, sorry, this is H4. Let me check 30 minutes time frame. Let's see if I can. Okay, this is a swinging uptrend over here. This is a swinging uptrend here. Okay, so let's do another practical here. Okay, so yeah, let's draw a trend line over here for this uptrend. So from the lower low to the higher low, those are the two lines we drew together, the two support levels we drew together. So let's see. Wow, it's respected it here and came back and formed newer one. So remember, immediately it is forming new one, adjust. Oh, always adjust your trend line immediately new levels are formed. Though it doesn't respect it over here. It doesn't respect it at all. So this is a good one over here. So let's see this one now. I'm drawing it up, so anytime it is touching this level again, it will surely buy. Let me see if it is correct. Yeah, it broke it down here just because the market has been buying for long. So this level, since this level is not working, you have to draw lower levels because this is the lower low. So you have to draw upper higher low, which is here. This is a lower, this is the higher low. We have higher low over here. So it is respecting more of the higher lows. So you see, so it respected it here, here. It respected it around here also, though it's ranged over there before buying. It respected it here, here. So that's that about trend line and support and resistance line. Thank you. God bless you. How to detect spikes for scalping, boom, and crash. Hello. In this course, we're gonna be treating how to detect spikes on boom and crash. How to detect spikes. Trust me, if you know how to detect spikes, though it requires some more effort and more analysis, and you have to consider so many things to detect spike, but maybe a spike or multiple spikes. There are times you can detect, okay, if at least one spike should occur, and there are some points where you can determine if multiple spikes will come, so that when you enter a market, maybe a sell for crash or a buy for boom, to milk the spike, you won't close after the first spike, mean that you have known that it is going to do multiple spikes, either double or triple spikes, depending on the analysis you did. So trust me, it's very simple, very simple, though you have to consider many things. First of all, I will let you know where big spikes normally occurs. Where big spikes normally occurs are when crash is on a downtrend. Wow. When crash is on a downtrend, big spikes do occur. Then when crash is on a downtrend, spikes occur, big spikes. When boom is on an uptrend, boom spikes up. So when it's on an uptrend, it gives a big spike. It gives big spikes. So, and also when crash is ranging maybe on smaller time frame, not higher time frame this time around, because if it is ranging on maybe 1 hour time frame from higher Bollinger Band to middle Bollinger Band, you'll be seeing something like this when it is buying. Maybe when it is moving up from lower Bollinger Band of H1 of 1 hour to the upper Bollinger Band, you will see something like this. That's the kind of thing you are going to see. Excuse me. So that's what you're going to see on 5 minutes. That is the kind of thing you are going to see on 5 minutes. On 5 minutes. So in this kind of case, okay, when I tell you higher, a strong trend, maybe if a crash on a downtrend, big spikes happens, or maybe boom on the uptrend, crash on a downtrend, boom on the uptrend. I mean 5 minutes or 15 minutes time frame. To trade spikes, it's scalping. You are scalping. So that means you need what? You need smaller time frame. But the only thing you just need to do, because you can't do without the higher time frames, even for scalping, you can't do without it. At least you need to know what the market is saying, where it is actually heading to. So you don't just open trades anyhow. So majorly to detect spikes, we are going to be using 5 minutes and 15 minutes time frame to analyze or to enter. Then you can confirm your analysis on higher time frames. So the first major tool I normally use to detect spike, and which works very well, is the support and resistance zones. Just like the previous lesson, how to draw supports and resistance lines, and what's it called, and excuse me, yeah. So where are we? So I've taught you how to draw support and resistance lines, right? So majorly we're going to be using those support and resistance lines, and also trend lines. Now these are what you're going to do when 5 minutes or 15 minutes is ranging. For example, let's see this throughout yesterday. For example, on 5 minutes, crash 500 was ranging, it was swinging. Now, did you remember the swing trading principle I taught you? draw the higher highs and the higher lows first. I've drawn the higher high before, so here is the lower low. Let the lower low touch at least 3 levels. Okay, I think this one has 2 levels for the lowest. It has 2 levels, here and here, and also here during the swinging period. So let's draw the lower high. This is the lower high. Let it touch at least 3. So we have 1, 2, 3, 4, 5. So we are good to go for that. To dictate spikes, crash. When you are selling crash, that means you are trying to trade the spike. And when you are buying boom, that means you are trying to trade the spike. So let's move this one up a little bit to touch these 2 supports. Okay, that's good. Now we are not buying in this market, we are only trading the spikes. So me using this tool, this swinging method, this swinging strategy, me using it, you can see where you can enter for spikes since the market has started ranging. So I taught you that anytime market is touching this line or this line, you sell. Anytime market is touching this line or this line, you buy, right? But we are trading spikes right now, so we are not buying. I don't say you can't buy, because the course majors on how to dictate spikes. So for example, when the market reversed, it has been on a downtrend from here. So when the market reversed from here, you might not be able to dictate what's going to happen over there. Maybe based on other analysis you do on higher time frames, you can dictate maybe it's a pullback, because at around this level it might be on a middle BB of any other bigger time frame. So let's check bigger time frame. Okay, this was almost up to higher upper BB of 15 minutes and close to the moving average 50, SMA 50. So let's check 30 minutes now. See it on 30 minutes. See it over here. Here is it on 30 minutes. So if you are following the trend principle, you would have dictated this spike using 30 minutes, because it's bought up to what? To the middle BB. And you remember the principle of entering trades for trending markets, especially markets that retraces back to middle BB. So if you have entered a sell over here, you would have been in profit, though you might have closed it here, because around this level you might think the market is still very much on a downtrend, on the normal downtrend. You might think it is still going to sell, but it started ranging here. I taught you that whenever you see the market start respecting the previous resistance on a trend, the previous support and resistances, that means a swinging market is about to start. So Please don't mind me, I have kata, so just bear with me. So that's that. On 5 minutes you might not determine where it's going to spike, but using higher time frames, you see that we can easily enter that trade just because of middle Bollinger Band. No other analysis, just because of middle Bollinger Band on 30 minutes. If you enter a sell over there, now I told you that there are some analysis you will do that will make you know if you're going to trade only one spike or multiple spikes. If you enter a sell over here, you shouldn't expect just one spike here. The one we saw on the 5 minutes, you remember? You shouldn't expect one spike. You should at least expect 2 or 3 spikes, or maybe 2 huge spikes, because the trend is on overall downtrend and it has been buying for the past, let's say, 1 hour. It was retracing back to the middle Bollinger Band to gain more momentum to continue the trend. So by the time it starts spiking, wow, it will spike very huge. And if some maybe buyers or maybe some people who doesn't understand the principle of the market sees, maybe whenever they see bullish candle, they just buy. Whenever they see bearish candle, they sell. For example, at that level, before the spike, these 2 candles will be very bullish. This previous candle, this previous candle, and this one also that closed in a pemba. This candle that closed in a pemba, you can see it over there. It will be bullish when it was still around this level, and some buyers came in over here. So see the great loss, see the drawdown, see the crash. So you have to know what you are doing on the market so as to avoid all these losses. So what are we saying? So as a professional trader, you will understand that it's just a pullback. The trend is still very much on a strong downtrend, and it's just a pullback, and it's an opportunity for you to enter a sell to join the downtrend. Now, alas, you joined the downtrend and it started respecting this support level, going up and down, going up and down. So that's another scalping method, swinging trade. So let's go back to the 5 minutes time frame for the swinging method. Yeah. So the swinging method, so if you start selling crash, anytime it touches either this line, this lower high, or this higher high, you will be in money. You remember I told you that even if you, for example, over here, maybe you sold it here and the thing refuses to crash, don't close your market in loss, since you know there is still higher high. It will still come to respect this higher high. Just to wait patiently. Whenever it touches this higher high again, enter another position, making 2 positions. Then you are in big profits over there. So those are the main principles. Then moving averages also, sometimes you don't need to draw resistance lines. Only though we'll go there, but for now we are still using resistance and support lines. Now let's move on to trend lines. How to use trend lines to dictate spikes. Oh, sorry. The resistance and support lines, I taught you only on the swinging method, right? On the let me say, on the strong downtrend or uptrend, you can also use resistance and support lines. Here is how. The principle of a good trend, take note of this. The principle of a good trend supports, maybe on a downtrend, supports previous supports must or usually turns to the next resistance. So let's see this place. The trend began from here. Remember what I told you about SMA 50? I told you if it breaks it, it will always come back to test. See the retest over here before coming back, almost on all time frames. So that's just a recap. Okay, now what are we saying? Support turning to resistance. I've promised you that I'm going to spend a lot of time on this, how to dictate spikes, because if you know only this one, you can succeed trading boom and crash, but you need to know other things. So support becoming resistance. So after breaking this support line over here, just draw a support line over here and wait for, it's broke it over here, and just wait for it to pull back to touch it. It will turn to resistance. Do you see that one? Do you understand? It was once a support level over here. It broke it a little bit over here, then came back to test it. Then if you enter a sell over here, just because of support turning to resistance, just because of only one support and resistance line you drew. Remember, we are still on support and resistance lines. So see that one. Now another support has been created over here. Another support line. Another support line was created here, though the markets ranged over here, so it basically didn't test. You see, so here was still a support, but till then it has not come back to test this level pertaining to this trend. Now see when it came back, when it started buying. If you have left that line, if you didn't delete it, this support line, see it turning to resistance here. Do you see it? Support line turning to resistance over here. So if you enter a sell over here also, you are in good money. So let's see this one. Okay, the trend has started obeying what's it called, SMA 5 and SMA 10 over here. So whenever it is just pulling back to SMA 5 or 10, sell. That's another strategy. I've taught you that one before. You sell. And if it is boom, when it is touching SMA 5 or 10, buy. So that's okay. This is what's it called, a support and resistance line. I've taught you support and how to use it to dictate spikes on swinging markets. Now this is how to use it to dictate spikes on trending markets, on downtrend, on strong downtrend. Now let's use it how to dictate spike on, wow, this is a good example on how to use it to dictate spikes on swinging. Oh, you can't really use it on how to detect spikes on swinging down or uptrend like this. You remember the swinging downtrend? This is an example of swinging downtrend. It is swinging and it is gaining lower levels. It is gaining lower levels and swinging downtrend. So here you use trend lines. Trend lines are very essential over here. So let's draw our trend line. Let's draw it from here. At least the swinging started from here. So let's draw the trend line from here. Let's draw the lower trend line. Remember, I told you it must be touching the previous low and the current lowest. And also for the higher trend line, it must be touching the highest. Let's take it from here. Okay, we have another one here. So okay, so see the market now. Because of this trend line we drew, let's see if we can use it to detect spikes. Now, if you have drawn these two together before, these two here and here, if you have drawn it together before, you will definitely detect this spike when it came here. Using trend line, you will definitely detect it. Let's see. So we'll be concentrating on the higher one because we are detecting spike on crash. So we'll dedicate our time on the resistance trend line. So just because of those two resistance you joined together over here and here. Now you've made the market here, you've made it here, you've made it here, and also here. It was just a little pullback up before going your way, and even here up to this level, see this bigger spike. So trend line also is very essential. So you can use trend line on something, on a market that goes this way, something like this. So that's that about trend line. Now moving averages. How to use moving averages to detect spikes. Remember about the indicator I showed you. I only use it as confirmation. I don't base my signal on it. Maybe for example when it was touching my trend line over here. Okay, for example, if I should follow this indicator, okay, this is a perfect example. If I should follow this indicator over here, I wouldn't have sold. Why? Excuse me. I wouldn't have sold over here. Why? Just because the line is not touching any sell. It is still within the waiting period. It is still within the waiting period. So I wouldn't sell just because of this trend line I have drawn before. I sold and it came my way. So don't depend on indicators. But most of the times when the indicator is telling you either very strong sell, don't depend on strong sell or strong buy, but very strong sell or extreme sell or buy on either 1 minute, or it is mostly what's it called, how do I put it? It is very very oh, it works well on 5 minutes. Yeah, that's what I want to say. It works well on 5 minutes and let's say 15 minutes when it is touching strong cell or strong bind. Let's see an example. We are on 5 minutes. See an example. It is touching strong cell over here. You see the spike. So this is two confirmations now. Here are two confirmations even without doing any analysis, or let's say three. It crosses the SMA 50 here, and it will always come back to the test. So you will be expecting a pullback, right? Now it is touching EMA 200 here, which is likely to spike if it's touching any moving average. Now it is touching EMA 200 here. You have been expecting a pullback from here also, and the indicator is telling you very strong sell. So those are three confirmations over there to sell and to make that spike. And that spike gave you let's see. It gave us 35 pips. Wow. 35.463 pips. Now some people doesn't know how to use this cursor to calculate pips. Let me quickly give you that. Click on the cursor, adjust this. You can see there are two lines. There is a vertical line that comes from up to down, and there's an horizontal line that comes from left to right. This is the horizontal line, this is the vertical line. So to calculate pips of a candle or maybe from where you are selling to maybe where you are taking profit, right now I'm using only one finger to control it. Now adjust it on the start or the close of the candle, then use your second finger, just place it on your screen. Remember, you are still holding. I'm still holding this. My other finger is still holding this. So now use this one, just click on anywhere on the screen. You see, so after clicking on it, the second one appeared. Do you understand? Now I'm still holding the second one still. Now use this finger to trace this one. Now what you will do is, oh sorry, okay, now what you will do is adjust. This line is already on the start of that spike, right? Now what you will do is just adjust it upward until this line gets to the close of the candle. Then you can see there are two numbers over here. This first number, this 37, is the number of candles from here to here. If we should count these candles now, 1 2 3 4 5 6 7, it will give us the sum of 37 candles. But this 65.112 is the pips from here to here. Hope you understand. It's the pips from here to here. So that's the easiest way you can calculate pips. Very easy. So the first thing, select your cursor, adjust it to the start of the candle, then use the second finger to touch on anywhere on your screen, then use it to adjust the second one to the close of this of the candle. So with that, you can use it to determine, okay, I want to know if you get this principle very well. So after watching this video, I want you to give me a pips, do crash 500 on the 5-minute time frame, just only one 5-minute candle, the buying one, the green candle, very completed one. No, I want you to do this thing and use it to calculate the pips, screenshot it and send it to the training follow-up group, just to know if you get it right. Excuse me. Yeah, sorry for the pause. Now, so that's that about how to dictate pips, how to calculate pips. So I'll be rounding up very soon on this how to dictate spikes. Now we are talking about how to use moving averages. So basically, moving averages can't solely depend on moving averages. Sometimes you have to do technical analysis by drawing support and resistance levels like this. Then you can just use your moving average to confirm. So for example, see here, maybe after drawing this support, sorry, I'm coming now. After drawing this one and this one, when the market was coming over here, you can use, there are 3 confirmations over here for a sell. It is touching the upper BB, it is touching this trend line, and just crossing, or let's say it is still on SMA 50 zone, still on SMA 50 zone. And basically, if you want to be using SMA 50, only SMA 50 to trade, maybe anytime the market is touching SMA 50 on 5 minutes or any other time frame that you want to be selling, see. But it is not advisable because it breaks it so many times. See it. But it's not advisable. It can't give you 100%. See how it breaks it here. So it is not 100% advisable. It's not 100% advisable. So that's that about moving averages. Just use it to confirm. Just use it to confirm your trend. So thank you very much for watching. I wish you success in your catching spikes. So start catching spikes. It is very simple and very easy. So thank you. God bless you. Bye bye. Different strategies for trading boom and crash. Hi everyone. This is the One Precept Plus. In this lesson, we're going to be treating different strategies to trade boom and crash. In this lesson, the different strategies, you just try to pick out. I'll just be teaching you randomly because my strategies doesn't have names. But the strategies I use, I will explain to you. I will explain to you, at least to be profitable in the market almost all the time. The first strategy I use is I don't trade when a market is not well defined. As in, if I can't, or maybe I'm analyzing the market and it's giving me buy and sell, maybe the probability of sell and buy is almost at the same level, maybe 50-50. I don't enter trade in that kind of level. I don't enter trades. So That's the first strategy. So I don't know what name I will give to that one. And let's say the three main strategies I use to trade is uh, the three main strategies is spikes, catching spikes, trading a normal movement of boom and crash, which is buying crash and selling boom, and also long-term trade. I also have long-term trade. So to dictate the spikes, you can refer to the previous lesson on how to dictate spikes. Now another strategy on how to how to dictate spikes, it works on every strategy you want to use. For example, let's switch to the 5-minute time frame. This is boom 500. Okay, now let's assume, see boom 500 right now. You can see that on the 30 minutes time frame, it is very near to the 50 moving average, 50 SMA. My 50 SMA is that yellow line. 50 SMA is that yellow line. So let's assume you waited for it to spike or to buy up to that 50 SMA on this 30 minutes and you sell. And immediately you sell, maybe after 2 minutes. Maybe it's a trade you wanted to hold maybe until it comes back to the middle BB of this 30 minutes. And immediately you sold, maybe another spike came up. You know you would have been in loss. So how to manage that kind of loss? So this is a very good strategy. How to manage that kind of loss? Immediately it spikes up, try to cool down. Once you are not overloading your lot size, once you follow the normal risk management, just cool down and reanalyze, check if another spike might occur. And if you check if another spike might occur, wait for the spike. Then if finally the spike comes, place another sell. But this time around, double your lot size. For example, maybe you've used 0.10 before to place a sell. So at that point, place a 0.20 lot size. So by the time, let's say you placed a trade here around this level, you place the sell here and it spiked up to this level right now, and you place 0.10 lot here. Now you can place 0.20 over here. If you have okay, for example, it's on 200 moving average right now. It's on 200 moving average. It has touched the upper Bollinger Band, and it's also on a resistance level, which is A. So at least this market might sell for the next 10 minutes before another spike comes up. So, and you have entered a trade over here before, which is 0.10. Now by the time this trade you enter over here, the second position you entered, let's calculate the pips. Let's say from here you've entered 0.10, right? Now to here, that's 22 lots, 22 pips, and that will be $2.26 loss, right? Now from that $2.26 loss, okay, let's say $2.4 loss, and you sold at that level with 0.20. Now when it comes back, let's say to this level, that is 12 pips, which would be giving you 12 pips will be giving you what? That will be $2.4 profit. $2.4 profit. Mind you, the first position, which is in loss, would have reduced by 12 pips also. The $2.4 would have reduced to $1.2. So minus $1.2 plus your $2.4 will give you what? So that means you will be closing that market in profit. So whenever big spikes catch you up, once you are not overloading your lot size, just calm down. Just calm down and apply this principle. You will see you will always close your market in blues. Do you understand? You might not close the first one, which is 0.1 in blues. You won't be able to close that one. So, but the second one you opened will overthrow or will overwhelm the loss and close at the profit of around $1.2 US dollars. So that's one strategy. You can also use it when you are trading spikes. Maybe you analyzed and you expected it to spike somewhere and it's continue selling or maybe buying on crash. Just calm down. I usually use that kind of strategy on the VIP group. I'll tell you to add another position at so points. Sometimes I might ask you to use big lot size or double your lot size. So that's the principle. So you can use it on both ways. Maybe when you are trading the movements, the normal movements, or trading the spikes, you can use that strategy to minimize losses. So, excuse me. So you can use that strategy also to minimize loss. You can see that it is already selling for almost 10 minutes now. So by now, if you have made that mistake, you see it sold for almost 10 minutes before another spike. So if you are not a greedy trader, you would have closed both trades before that second spike, and you definitely close in overall profit. When I mean overall profit, you understand what I mean. One giving you a little loss and the other one giving you higher profits, whereby covering up the loss and giving you a little profit. So that one can be used for the scalping. And another thing I want to share with you, sorry about that. Another thing I would like to share with you is the spiking, the way boom and crash spikes. Whenever boom and crash, either boom or crash, whenever it is on a long normal trend. When I say normal trend, I mean when boom is selling and when crash is buying. That's what I mean. So whenever I say normal trend, you just know that this is the normal trend of boom selling. So that's what I mean. So whenever it's on a long trend like this, it will always spike at some point for a pullback to continue the trend. Whenever it's pullbacks like this and come down again and respects that previous support or maybe resistance on crash, or sometimes it might not get there before spiking again. Let me look for a perfect example of the ones that doesn't get to the last spike before spiking again. Seems I saw some one here. Yeah, this is a perfect example. It spiked here and it was selling again. Here it behaves like a pullback over here, now reversing again. But by the time it got here, not even getting to the previous support, it spiked again. So immediately it did this little spike over here. Just prepare for a buy. Just allow it to trace back a little bit and enter, or if better still, you can enter immediately. So if you have entered immediately at this level, it will definitely come and break this line. But if it comes down to test, to respect this support, it didn't respect that support. As in, what I mean is, it didn't sell to this support before spiking again. That's what I mean. But if it sells to this support and spiking again at this support, it might start ranging. It might come here again and respect it. Do you understand? So when markets respect this previous support after a good trend like this, and it respects the previous support, it will almost, most times it respects the previous resistance also, whereby resulting to swing markets for some time before breakout, either down or up. So but if it doesn't, if the first one if the second pullback doesn't get to the previous support level, just prepare for a longer buy or a longer sell if it's on crash. So prepare for a longer one, whereas that means it will break this support or resistance. So let's look for another example of this. So we are looking for two examples now where it respects direct support level and where it didn't get there before buying again. So we are looking for both and see what later happens. Okay, this is number one. See, it was on a good downtrend. It spiked over here. It came back again to spike over here. You can see it's ranged over here, though it was a little range. This ranging will be more effective on 1 minute. It will be more visible on 1 minute time frame. Yeah, this is it. Sorry. Yeah, this is the ranging. The first spike was here, still on the same level. So, but now the ranging starts. Did you see that? So that's the first example. So if market is respecting directly the previous support, the market will at least 80% assurance that it will respect the previous resistance also, thereby resulting to ranging market, swinging market. I mean swinging when I say ranging. So let's go back to the 5 minute time frame. So now let's look for the second example. Let's look for the second example. Okay, this is the second example. See where it spiked over here. You see, after the pullback, it was coming down again, but didn't get to this level. You see, then spiked over here also. Now see how it broke. Okay, though it's respected this resistance over here a little bit, but later broke it. It will always break it. Shall you see? So if you see any market condition like this, just prepare for a longer pullback. So that's another strategy. So if you understand that principle, you will always make the market whenever you see something like this on any time frame, either 1 minute up to even daily time frame. Then other things I see, there are some things I see in markets that immediately I see it, I know what will happen. Immediately I see it, I will know what will happen. For example, when when boom or crash spikes and sells, for example, see here, it has been buying, it sold, then spiked again, but didn't break this previous resistance. Do you understand? It didn't break that previous resistance. So this is very good for selling. This is a good strategy for selling boom or buying crash. So see what happened over there. It has been spiking, it's retraced, then spike again. Normally, if this should be a good uptrend, the first or second spike should at least close over here, and the second spike should close over here, whereby breaking this resistance. But you can see the second spike stopped on the resistance. It did another one. This is another confirmation that that resistance is a strong resistance. When spikes are hitting a particular level, do you understand? When spikes are hitting a particular level and it can't spike beyond that level, maybe 2 times or 3 times, prepare for a longer pullback. Just like I always explain practically to my physical students, I always make it practical for them that you should look at the market this way, as if a door was locked and you want to burgle into the door. You want to break it by force, maybe because you don't have the key. The first attempt, you might not, it depends on how strong the door is. So we are using this door as what? As resistance and support levels. So the first attempt, you might not be able to break the door. Then what will you have to do? You will have to move back a little bit, maybe back to where you were coming from. Maybe back, for example, let's say you moved back 20 feet. Let's say 2 feet backward. Then come back again with full force. You hit the door again. You couldn't break it. What will you have to do? Then you should know that you need more momentum, more power, more force. So you will have to move back like 4 feet. So that is what is happening over here. So whenever you see a market hitting a resistance or a support level and it can't break it, expect a bigger pullback. So see what is happening over here. You can see it pulled back. Now this pullback was even more than what we expected, because normally it should pull back to this level, then start spiking again, just to get rid of this resistance level. But I think that resistance was too much for it, and it's hard to pull back very well. even still so this one is now pulled back again. These are turned to a downtrend. So if you see, anytime you see a market hitting a resistance or a support level more than 2-3 times and it couldn't break that level, just try it, just expect it to come to that level again, then enter the opposite. Maybe it is a support, maybe it is a support it is trying to break. Just try to buy at that support level, then it will pull back even more, even breaking the resistance it has before, just to get rid of that support. So that's another strategy. Yeah, another strategy to get rid of spikes, as in to trade the opposite direction, which is the normal trend: selling boom, buying crash. Multiple spikes has two different what's it called? It has two different forms. Multiple spikes. We have the small, big, bigger, biggest. For example, this is a perfect example of the small, big, bigger, biggest. See, it starts with a small spike, bigger one, bigger one, bigger one, then longest one. Whenever you see spikes coming, it usually come in a row. You won't see any red between it. Even if it is crash also, you won't see any green in between. You see it now that it doesn't have any red in between. So immediately you see a red candle, just sell. That's the first one. Small. Then we have big. It will start with big candle, then end it with small candles, small spikes. Let me look for the example of that one. Big candle. This is a big candle. You can see the second spike was not up to the first spike. So you have 3 reasons to sell over here, even 4 reasons if we should use our indicator also. Here are the 4 reasons, even 5 reasons. I'm saying 5 reasons to sell over here. It's a downtrend, number 1. It is testing the SMA 50. Number 2, it is on the it has touched the upper Bollinger Band. Number 4, downtrend, SMA 50. Okay, upper Bollinger Band. 3, that's number 3. Then what again? The spike was a big, then smaller, then you've seen a complete red candle. Make sure the red candle has closed, and this is forming the second one before you enter this kind of in this kind of strategy. So the first one has closed and the second one is showing. That's number 4 confirmation, and the number 5 confirmation. Our indicator is telling, though our indicator is still on the weight, so don't let us consider the indicator because it's still on weight, around weight area. It's not touching the strong sell, so don't let us. So we are having at least 4. And okay, see, I'm seeing another one. It's on a support, on a resistance level, this resistance level, excuse me, or let's say zone, resistance zone. So you have 4 good, or let's say 5 good reasons over there to sell. And if you sell over here, whenever you are selling, whenever you are trading in normal trends, don't stay too long, or else you want to use small what's it called, you want to use small lot size, and if you are using small lot size, that means you are trading a long-term trade, and you should not analyze long-term trade on 5 minutes or smaller time frames. Start from the daily time frame, down to the 5 minute time frame. The work of 5 minute time frame there, 5 and 15 minutes, is for perfect entry. Just wait for a pullback on 5 minutes to enter. Maybe it has been selling before, or maybe it is buying and you want to sell, boom. Or maybe crash has been selling and you want to buy it for longer time. So try as much as possible to start from the daily time frame. Start analysis from the daily time frame. So I think these things. Then another strategies I use, I use candlesticks pattern. The ones I used most is the rejection candle. For example, you can see this double rejection over here. So this double rejection we are seeing on 5 minutes now. Let's switch to 1 minute. That thing I taught you about testing a level twice or 3 times, it would have happened on 1 minute. See, you can see it has tried here before. Oh, okay, it doesn't come up to this level before selling again. It was that other one I told you. The trend was an uptrend from here. It was an uptrend from here, then got to this level, reversed, which is a pullback, right? The normal thing it should do here is to continue the trend, but didn't get to the previous resistance before showing another red candles. So here you can enter a sell over here and expect it to at least sell up to this level before spiking up again. So those are the strategies. Then let me teach you some form of market structures. Sometimes I use pure market structures. The market structures I normally use are the double bottom or double top, triple bottom or triple top. Then I use price action structure also. Then I use head and shoulder. Let me draw that pattern for you. The double bottom will be something like this. I usually show you that one in the VIP group. The market has been on a downtrend. It came here, pulled back, came here. Sometimes it won't respect this lower low, then form a higher low over here, whereby forming a double bottom. Then it will always break this resistance, or double top, just invert it, is the same thing. Sometimes the double bottom might be like this. The previous low, the current low might be lower than the previous low, and also on the double top the current low might be a little bit higher than the previous low. The previous high rather. This is the previous high. It might be lower than the current high. I think you understand what I'm saying over there. Let me recap. We have 3 types of double bottom. Some double bottom are tested on the same support level. That's number one. Some don't get to the previous support level like this, whereby the previous low is lower than the current low, you can see, and this is the third one. The previous low is higher, you can see it is higher than the current low. Do you understand? So in this kind of level, when you before you can enter a trade over here, let it break the middle Bollinger Band. I think the middle Bollinger Band should be somewhere around here. So let it break this middle Bollinger Band, then enter here, enter your trade here, or here it will, when it gets to this resistance level, it will always respect it a little bit. So let it reverse a little bit, then enter the buy, because it will always break this resistance when it is forming double bottom or double top. This same thing, just turn it upside down for the double top. So this is for a buy, then double top is for a sell. That's all. Then we have head and shoulder. Head and shoulder is something like this. Let me draw it very well. Yeah, this is head and shoulder. This is the head. Here's the head. This is the first shoulder. This is the second shoulder. The market has been buying over here. It has been on an uptrend. You know, normal uptrend should be a zigzag formation like this. Do you understand? Just like this. It should be forming new highs like that. So yeah, that's it. When market is on an uptrend like this and it pull back like this, it is still normal, it's still on an uptrend, and it continues like this, and now get to a point like this and pull back, and they pull back. Normally the previous support, when it's on an uptrend, the previous resistance rather, this previous resistance should serve as a support over here, thereby continuing the trend over here. Do you understand? Thereby continuing the trend. But when it starts when it breaks it down and come down to respect this support, you see, let's say it's respecting this support level, so just wait for it to pull back to this resistance. When it gets to this resistance, enter a sell over here, because it will respect this resistance and form head and shoulder. This is the shoulder and this is the head. So when it forms the head and shoulder, it will break these two supports and starts a downtrend. Mere looking at that, mere identifying that kind of market, you can enter a long-term trade. Depending on, if you cite this kind of thing on higher time frames, you can enter a longer sell or buy. If it's on a if the market was on a downtrend, they just turn it upside down. The head and shoulder, the head will be facing down as if you are pinning your head, and the shoulders will be facing down, so ready for a longer buy. So let's look for examples of double top and double bottom and head and shoulders. Don't mind me, I've been having some catarrh since. So this is an example of double bottom. Let's switch to the 5 minute time frame. It will be more clearer on 5 minutes. Okay. This is not a good example. Coming. Let me move back to that 15 minutes. Yeah, this is a perfect example of a double bottom. See, that's the W. This one is respecting. This one is respecting. I mean, this is a double bottom that has the same level of supports. You can see it's respected. I told you it will always respect this. Not always. I mean, market doesn't swing always, because I told you the other time that if it respects this this previous support, the direct previous support, that it might start swinging. Sometimes it doesn't start swinging, but just do a little pullback when it gets to this resistance, then starts buying. So this is the double. That's how to identify double top or double bottom. This is a good example of a double top. Do you know the category this one is falling into? The previous high. The previous high is lower than the current high. So that's another example, but this one is on the same level. That's double bottom. This is another double top. What's wrong with MT5? Excuse me, this thing is misbehaving. Yeah, we have another type of double top over here. Let me adjust it to 5 minutes. It will be shown better on 5 minutes. Yeah, that's good. Thank God I've shown you an example of the previous high being lower than the current high. Now this is an example of the previous high being higher than the previous low, and it's also a double top. Don't forget it has been on an uptrend. See this M over here, also see this double bottom. It's another form of double bottom, but it's not very clear. So this previous low is higher than the previous low, than the current low. So, and you can see it came back to this level and tried to reverse. It will always try to respect that resistance. So immediately it is respecting it, just enter a buy for trend continuation. And if it's on the top selling, just wait for it to pull back a little bit, then enter a sell. So those are the strategies. Now let me show you head and shoulder. Head and shoulder. This one is not forming well. Okay, let me pause the video so it won't waste. Yeah, here we go. I found a perfect example of head and shoulder market structure on crash 500 30 minutes time frame, August 11, between August 11 and 12. So you can see the trend has been on the uptrend. It has been on the uptrend. Can you sight the head and shoulder over here? This is the first shoulder, this is the second shoulder, and this is the head. Now let me draw the resistance lines. So this was the previous resistance, and this was the previous support. So let me zoom in. I'll just zoom out. So excuse me. The market was on the uptrend, right? Came here, pulled back a little bit. Do you understand? Then normal. This is still normal for uptrend. Then came here again, then starts pulling back. At some point, you should think something like this wants to happen over here. Maybe sell to the middle BB and start buying. If you have bought over here, you are correct. Your analysis is right. You are correct. But those are the kind of losses that is inevitable on the market. No matter how you have good strategies, no matter how professional you are, there are some things that sometimes you still have to lose. Because normally, if anyone can decide that, okay, this market is only pulling back and we start buying at this point, but see what happened. Just see what happened. It came back all the way from here to respect this resistance, this support. Broke this resistance over here, the resistance that should have served as support. It broke it, then came back here, then moved up again, now respecting this resistance. So as a good trader that knows this kind of market structure very well, if you sight this something like this over here and you saw it pulling back like this, you should know that you shouldn't enter a buy over here, rather a sell. You should know that it is ready for a downtrend and see how long it sold for. Market structure, it is it's a very good strategy also. So that's it. If it's on a downtrend, if the market was on a downtrend, I told you it will be as if you are pinning down your head. So this head will be down, the shoulder also will be turning down. So just try to locate it. It will be like this. It will be on a downtrend. Then the first shoulder formed, the head formed, the second shoulder formed. So it came back to break this support, then now came back to respect this resistance, then came back again to respect the support it has once broken, then finally breaks out. So thank you very much. I hope this will help you so much in improving your trading skills. Please try to share the good news of One Bicep Plus to your friends and families, and also the affiliates program will be introduced on Monday, so expect something big. So let me just share it with you now. Anybody referring anyone to me, so any service that person is purchasing, either the training, the signal, or anything, for lifetime, maybe is renewing signal. Anytime he renews the signal, the referral will be earning 10% from the payments. So I think it's another good opportunity for you to make money if you are good in referring, if you are good in promoting businesses. So thank you. God bless you. The part 2 of this video will be sent soon. Anticipate. God bless you. Bye bye.